welcome to the show. Good morning, all the way from London. Chris Beecham joins me early here in the hot seat in a very exciting start to the week when the Middle East crisis has worsened. What were you up to at the weekend, very quickly? Because I woke up to images being sent to me from the Middle East.
I hadn't gone to bed. This is the second time it's happened, because when Israel first struck, I was just about to go to bed and then the news came through, so I stayed up. And then again, I was on the cusp of going to bed. I saw the Trump post, the way they announced it, which is in itself is crazy.
Yeah.
This was announced through social media and then obviously the official release. But yes, I was still up to watch it come through, so I was up for another hour. Yeah, digesting the initial impact.
I had gone to bed early because I thought I'm going to catch up on the long week with Tasty here. I'm sure all of you saw that on the Twitter on Friday, on my Twitter, and also saw the updates that we had here on the show. Good morning to you, David Boise, morning, and Julian. So great seeing you. I hope you did make full use of Rich's credit card and Tom's credit card at the bar because there were free beers. It was a very hot Friday. Gavin Ackers as well. Good morning. Avon on the list today, and Wing It saying good morning from sunny Milan. Looking forward to the get together tonight. Wing It, you're in for a treat, especially with volatility hitting the roof at the moment. Angela McKelvey, good morning as well. Really upset that you, disappointed rather, that you weren't there at the event on Friday. Positive business announcement from ITM, Avon, and Plus should lift their share prices today, in his opinion. Thank you so much for chiming in, Monkey Man, as well. Morning, you apes. That's you, Chris.
Sorry.
All right. Right, so let's just catch up on some of the big moves. You were messaging me at the weekend about oil, so let's start with that.
Yes, but the funny thing about this, or the funny thing in the inverted commas, is that almost the lack of reaction. Yes, oil prices are pushing further towards $80, as you'd expect, because of the surprise of this move, but it hasn't gone any further. If you look at equity markets, they're down a little bit, but they're certainly well off the lows. And then oil prices, yes, moving in that direction. But if there's nothing that results from this, then maybe you don't get much more of a reaction. I think it's very much all to, if I say all to play for, you understand the meaning of that we don't quite know what the reaction will be. But there are discussions over whether Iran will do anything at all.
So far they've kept mum, haven't they? They haven't
so far
they've
kept mum. There's a lot of comment, and again, this is sort of macro tourism analysis of the worst kind, but there was a thing yesterday where the Iranian parliament voted to close the Straits of Hormuz, but the parliament, of course, purely advisory. They can't.
Yes, they can't do it unilaterally.
No, it has to go to the Iranian security, equivalent of the Security Council, essentially. So there's no official word of that. And because so much oil that goes through the Hormuz goes to China. So if you close that off, you are going to get a very angry phone call.
Oh, angry customer, yes.
Very, very angry customer, not a happy bunny if that were to happen.
Yeah.
So it's not the sort of slam dunk response that people assumed would happen.
No, and I think Hormuz is the key. So I have made a special graphic for our trader friends here.
Oh, look at you.
Yeah. And yeah, as you rightly say, China is going to be not a happy customer. Neither will some of the top Asian destinations, India, Japan, South Korea as well. And not to mention, all the other Middle Eastern, buddies that have to get their oil. There's no other way. There's no other way except to get it through the Strait of Hormuz, which is a critical choke point. Some almost a third of global oil supply has to pass out of this. And I just looked at some very high level numbers. These numbers crunch from a variety of sources, including Bloomberg and Reuters as well. Just very high level there. 84% passes through here to go to Asia. 38% comes from Saudi Arabia. So the oil that passes through here, the energy that passes through here, 38% from Saudi Arabia. Can you imagine Saudi Arabia getting very angry? Am I not right in also saying, I was trying to look up a lot of historical, you're very good at history, that the Strait of Hormuz has never actually been closed.
No.
Yes.
No, this has always been the threat. And
That's right.
It's hung over for decades of don't strike Iran because this will happen. Where's your figure for closure risk? What's that based off?
So the closure risk is, it's always been...
is that your careful model?
the model based on data from a variety of sources, including EMEA, including IAEA, including Bloomberg and Reuters as well. So some of the things that have happened in the past is, there's great talk about mines. There's great talk of lobbing of missiles to stop oil tankers from even proceeding. And any hint of that or a choking off of that area is enough, right? Is enough to cause...
You don't even have to close it, really.
Yeah.
I've already seen shipping costs have gone up over the last couple of weeks because of the potential risk. And you've seen it with, obviously, the Houthis and the Red Sea. So...
Yeah, well, we're going to get it coming up right after this. But if you like a map, trader friends, of just
like a map.
Oh, I love a map. Love a map. There's a really good one which I've just got up here right now, and that just to show you how important this is, because it's 20% of the world's oil passes through the strait, and that I think at its widest point is it 33 kilometers?
Not very wide at all.
No.
It's so easy to close these waterways if you wanted to. Although, given that you've got so much Western hardware, and indeed the Gulf navies as well are prepared for this, so it's not as if there would be any countermeasures. So we'll see what happens. Really.
Yeah. And on that note, let's get to coming up. Right, Chris, take us through the coming up.
We go up with overnight action all straight away, and then 8 o'clock the opening bell. We'll see what's moving on the open in London. Not a busy morning from RNSs, however, so we'll see what else moves.
Well, thankfully, because there's plenty moving.
And then we are a special moment live from Milan, which apparently involves me.
Yes.
Being rich.
I did send you the rota on the weekend.
I don't read emails.
Oh.
I have to interview the jammy so-and-so that's going all the way to Milan.
I know, right? And then after that, after the event, he then stays for the rest of the week.
Yes,
Jolly.
it's a tough life, really.
Tough, it's really tough. Wait till you see the pictures from the dinners over there.
Yeah, so, and then 8:35, normality reasserts itself, as it always does, and Angeline and Matt return to discuss markets. And then 9 o'clock, all sessions.
Yes.
Stocks.
With me.
And then 9:10, investing experiences. Who have you got? Is Dylan related to the poet Terence Rattigan? I always think I see his name, or is it not?
I don't think so. Although Dylan can be very poetic.
You can ask him.
Ask him. Last week,
Yeah, I'll just interview him. I'd think he'd really good.
Yeah. You can stay, Chris. Don't go away.
And
Don't
it's
go.
9:35. It's Chris Beecham. No, it's Axel Rudolph, as ever, with Trade of the Week. Thankfully, I'm not subbing in for that. He was away on Friday, so he's returned. I'll find out where he's been over the weekend.
Any idea what his trade of the week is?
No, everyone always asks me. Nobody ever. He never tells me. It's this closely guarded secret. It's like I don't know what it's like actually. That metaphor just failed on entry there. Sorry.
Right. On that note, we're going to go straight into overnight action. This is a very, very quick sting. So don't go away. Stay with us. It's just going to be a sting. Yeah. Here we go. Hey, trader friends, welcome back to the show, and what a day it is for those of you that have been watching this over the weekend. The Middle East crisis worsened after we saw the US enter the fray, the US entering Israel's war against Iran over the weekend, launching strikes against 3 nuclear sites in Fordo, Isfahan, and Natanz as well. I woke up, I don't know about you guys, let us know on the chat here how whether you caught it the evening before like Chris, or like me, you woke up to those images. And right now we're waiting on news from Iran and also some more news on whether or not the Strait of Hormuz is going to be in any way affected. So let's just take you through some of the overnight action, taking a look at first of all CNBC's front page, talking about why global markets seem to be brushing off the US strikes on Iran. Chris, we talked about this earlier on. It was like a bit like a precursor to what happens next. Markets seem to be oil still higher, but not as high as expected. The weekend, you sent me that image saying that at the moment looking 80, but it didn't get to 80. No,
the IG weekend markets came into their own as ever with that kind of thing. You did see some overnight weakness in the futures and then in a strengthened oil prices, but it hasn't really followed through. And I think this is almost the dog that hasn't barked for this, really. What is the Iranian response? The US, of course, was at pains to say and had communicated to Iran, apparently, that this was a one and done moment. This was that was it. If there was no other response, then they would also not take any further action. So there's sort of a compelling reason for Iran not to do anything else. But you do argue that maybe national pride. I know the Iranian president spoke to the French president over the weekend and said, well, if it was you, what would you do? So there are possibilities, and the markets should still be aware that there is this the potential for this. But if you're looking at oil, if you're looking at the VIX, looking at stocks, it's just a bit of a shrug of the shoulders, really, at the moment. And that's perhaps the key thing here.
Do you buy the whole, lots of industry watchers talking about $100 a barrel oil if the Strait of Hormuz is disrupted or closed?
Yeah, if is always the key thing here. And remember the predictions about how high oil would go in the wake of the Ukraine conflict, and that proved to be incorrect. I think we talked about this almost a week ago. In fact, exactly a week ago, really. Look at where oil was in January. Look at where it is now. Yes, it's back there, and it is higher than it was a week ago because of these unexpected events. But now this is priced in. We have to wait and see what happens. And if you're OPEC as well, you'll be looking at that and thinking, well, oil is now $10 a barrel higher than it was 2 weeks ago. If we were to increase production, this would be a good time to do it. And they could sell it as a service to the global economy. It would probably win them a lot of brownie points with the US as well to bring down oil prices to keep things in check. We have got the Fed chairman speaking this week, so he might have a bit of a comment on how oil prices are faring and how that will begin to factor into calculations.
Cool. MST Marquis Sol Kavonik saying oil price shock similar to levels seen in 2022 following Russia's invasion of Ukraine. Maturian, look at the amount of talent and insight that we have on Trade Live with IG. Maturian saying I was on the first Royal Navy ship to do the Gulf Patrol Straits of Hormuz back in 1980. And here we are again. Maturian, maybe you can let us know because, any insight on, helpful hints as to whether there's going to be disruption, because I know the Iranian parliament has approved a move to close it, but as Chris rightly said, this does not mean it will be closed because this is just they're just advisory.
Recommendation, if you like, that's what we should do. So they can sort of say it sounds good, worth a few headlines, worth a couple of dollars on the crude price.
Yeah,
but they have to follow through.
Yeah. Also, CGJB001, that doesn't really roll off the tongue. You might want to get a handle that's a bit easier. Is that their customer number?
That's me.
That's you!
Live engaging with everyone.
Why have you got such a terrible handle?
Well, I didn't make it for this. I've been in there long before.
What is C?
It's the middle names. I've got two middle names.
Oh, I see. What is G?
Oh, well, you have to do a poll for the middle names.
Oh, right.
There you go.
So have we got that poll up, producer Phil? We've got a poll as well. Fantastic. It is up. Please put in your poll, because we're going to reveal this after in a few moments. Taking a look elsewhere just coming off my screen now, but moving over to elsewhere, because we are also getting loads and loads of similar sort of comments. But Bloomberg is focusing more on Trump doubling down on monumental damage done underground in the Iran strikes. Do you think he's doubling down because he's not sure whether or not they actually, did the damage intended? Well,
if you look at the satellite photos, it looks like there's plenty of concrete dust floating around those sites. But the reports are now that there were some Iranian trucks seen leaving these facilities on Friday, and that they may have been carrying some elements to other places. And even over the weekend, US officials saying we don't actually know where a lot of this stuff is now. So there'll be a hunt is on now for that as well.
Interestingly enough, we could see potentially more on this, because isn't there a press conference later this afternoon? I think I watched on the news at the weekend, there was this expectation that there was going to be a big announcement later today for them to update the world's press as to, whether or not it has been a success and they've hit those targets or not. For those of you that enjoyed my guest, Joachim Clement from Pan Neo Liberum, who has extensive experience covering this sort of market reaction to this sort of geopolitics. He sent out a note early this morning, which I am getting to right now. 10 to 20% downside in terms of market downside if Iran closes the Straits of Hormuz.
In stocks, 10-20% downside in stock.
No, he says, I'm just reading, trying to summarize this for you. In terms of stock markets, initial correction of stock markets of 5 to 10%. 5 to 10%. Whether or not, this is according to Joachim, this correction lasts longer and becomes deeper depends on how the trade war unfolds in the next couple of weeks. Meanwhile, if the Straits of Hormuz is shut, we expect a major stagflationary shock similar to 2022. In this case, so this is where the 10 to 20% correction comes into play.
Right.
In this case, if there's a major stagflationary shock similar to 2022, then in this case, a 10 to 20% correction seems likely. Right, the poll, I saw that flick up earlier on, producer. It's still going on. Please put in your comments. We'd love to know if you are one of our clients. Indeed, I met many at the event on Friday, or if you are thinking about it, or tell us who you're with, if not with us, and what we can do to get you to come over. Kirky, away from our numbers. Hey, Neil, how are you? Good to see you on Friday. Neil saying, Kirky, unfortunately, I feel the UN has once again proved to be of no deterrent to geopolitical agendas. Chris, your thoughts on the UN?
On the UN, world's greatest talking shop. Pointless.
No teeth.
No teeth. The Iranians will make a noise, but with the US on Security Council, there's nothing they can do, really, I think. So it will allow for further displays of what's the word? Outrage and shock. But apart from that, not much else really. Yeah.
And pushing your view to the top front page of Reuters, they're going with a different angle here. They're going with, looking up for the Iranian response after this weekend's excitement. World awaiting Iranian response after the US hits US nuclear sites. Do you think Iran's just going to be quiet and twiddle with the Straits of Hormuz, or do you think they will respond? I think it's like a Chris Beach and crystal ball question.
Yes, they have a high risk of response. I think also that there's also attacks on US installations throughout the region. Iran really beating the drum for retaliation, but you can't be blasé about this, but you have to say that they've been beating the drum on retaliation against Israel, and it has very much not delivered in terms of a response. Now, we shouldn't assume that is essentially not going to happen. But that's why the market, I think, has been so calm, is that they've seen the past week and the lack of a response. Iran has so far shot down 4 Israeli drones and nothing else.
I mean, it's clear that, we're on a knife's edge here, but whether or not it worsens or not
yes,
is still...
It will be obvious with hindsight at this point. There are so many possibilities. If you'd said a year ago that Israel would attack Iran and within days they would establish essentially unfettered ability to attack any site in the country, people would have said that was mad and limited response. But that's what has happened so far. And that's why the market reaction has been so calm in stocks. Oil prices obviously continue to move higher. Looking to compare to where we were in 2022 with the Ukraine, that there was the $80 level we were in January, and then by May we were at 116.
Let's come off my screen.
So
yep.
There is
and bring oil up.
At the moment we could be in the early innings of something more sustained move higher. So it will take time to emerge. Maybe oil was too low, around $60 for US crude a couple of months ago. Certainly we've seen a bit of a bounce, but it very much depends on where OPEC goes from here, whether it takes, as I say, this opportunity to just turn on the taps to maintain market share, to just take advantage of these higher prices. Because that's what they've been aiming for, is higher price on a sustained basis for oil, and this appears to be what they're getting at the moment.
Let's just take a look at the daily chart oil here, and you hear technicians talk about the looking at swing levels, and if you are looking to go long, there is that swing level there at 72. Just taking a look at also the gold price, because interestingly enough, gold is now 0.4% lower. Yeah. So, this is kind of, chiming in with what Chris was saying just now. Is it a case of if the Straits of Hormuz stays open, we're going to be okay? If it doesn't, then we're going to see, a further move into safe havens.
Yeah. So you can only trade the prices in front of you, but you do obviously see this sharp reversal in gold that's telling you something there that people aren't immediately rushing for a further safe haven here. Dollar yen's higher, VIX is off the highs of 22 we saw overnight. 22 or so has been about the ceiling for VIX on the IG platform, really, on the blended VIX product we have, 22 and a half over the past couple of weeks. So it's not really mimicking the reaction we saw to the tariff announcements back in April. Of course, this does take tariffs off. Again, just pushes them further out. It's almost as if the administration has given up on tariffs and doesn't really care, which is the perception I've had for about 3 weeks, is that they've decided, do you know what, we're not so bothered about tariffs. It's not really gone very well, I think.
We'll create another diversion so we can
exactly.
talk about something else.
Troops into LA, Iran attack.
Yes.
All this works to move attention on from what the uncharitable explanation would be the failure of their tariff policy.
Yeah, and speaking of that, just highlighting this, trader friends, about what we're talking about, just going over to the options front as well, and just showing you, you saw the VIX earlier on, which I put up, and you saw that the handle there still around the 22, and also look at the US 500. I mean, take a look at that. It's still at the 20 level. We're not seeing a huge spike in vol there, implied volatility. In even going out to next week, it's still around the 20 level. I'm sure Matt Arbour is going to bang on about this when he comes on in just a moment. Meanwhile, if you want to come off my screen, just want to also talk about scenarios. So the other scenario is, what if the Straits is blocked? Maturin, any insight onto flags, what you look out for? I have made a chart, a handy chart to try and illustrate this easily for you guys. And I'm going to try and get it up here, if I may. The winners and the losers, how many minutes they open? 8 minutes, 8 minutes, you think? Yeah. So I'm going to bring this across. And let's have a look here. So the likely winners and losers, right? European stock impact.
Energy you've been busy this morning.
I have been busy. I came in early, and I
don't get this with Rich. I don't get whizzy charts and things.
Oh well, this is the added value. I hope Rich doesn't say that. This is the added value. I have to say that there was a tree that crashed onto the tracks, and then I had to get an Uber in. Because there is no Rich. Rich is in Milan, so the Ong has to be in because it's do or die.
All hands on deck.
Or it'll be Chris Beecham with a wig on.
Me talking to myself again.
Let's have a look at this. I'll go through the likely winners, and Chris will go through the likely losers. So, likely winners, oil companies. Obviously, you saw that last week already. The big ones, especially ExxonMobil and Chevron in the US, and likely winners in Europe would be Shell, probably Total. Defense contractors, your BAE, your Rheinmetall, those especially that have. You keep hearing me say this over and over again. The links to drone technology, anti-drone technology, they are the ones that are likely to move. Chris, take us through the likely losers.
So what we have airlines, IAG, Lufthansa, Wizz Air, EasyJet, Finnair, I'm trying to read these, North Atlantic, all of these. Of course, airlines have priced out this stuff well in advance, but you might see it further down the line, of course, if you do see a disruption to flights as well. It's a key thing to bear in mind. And then travel and leisure, unsurprisingly. Carnival, TUI, Thomas Cook, Dart, all, if you get weaker consumer confidence, if you're worried about this stuff, then yes, you'd expect to be reflected in bookings. And then, unsurprisingly as well, cars. Is it the third time I've said unsurprisingly? I think so.
Yes.
Sorry.
It's only 7:54.
Ferrari, Porsche, you can keep account of these things. I can't read that last one, Valeo.
Yes.
It's too far away. We need a bigger board. We need a bigger board.
We need a bigger board. People, if you like and subscribe, you can get us a bigger screen, which means you get a bigger board that Chris and I can see. So let's have a look at like and subscribe, because if all this information is really useful and we love bringing it to you, please like and subscribe so we can do more of this. we are going to guess the chart next, and there is a price involved. Jesse 14, have you received your price yet? Is it a US or a European stock, Producer Phil? That didn't sound very confident. He says he thinks.
I think it's the US, yeah. I think it's not a word we want.
It is the US. Okay, great. And it's CFD. Here we go. Guess this stock. Two more minutes to the opening bell, and we are up for a huge mega session given all the things that happened the weekend. And also for those of you just joining in, we're looking out towards the reaction after the US joined in on Israel's war against Iran and launched those attacks, Operation Midnight Hammer. Before that, let's get across who the winner is for Guess the Chart. It is Boise. Well done, you. You beat all of us here, well, except for Producer Phil.
Yeah.
In the gallery.
A very poor stock price.
Yes, indeed.
Listed at 148 back in 22. IPO price was $68 a share, to be fair, and then started at 146. So it obviously opened high on the day, but it hasn't really gone anywhere in the last 4.5 years.
And also Airbnb coming under fire after quite a few, shall we say, scandals and settling out of court for some of them.
All these European countries not keen on
Yes.
tourism as well.
Yes, and in Southeast Asia, there are lots of places that have signs up now that say in apartment blocks, no Airbnb allowed, and in the contracts as well. Right, 10 seconds to go. You got the bell?
I have got a bell.
Right, well done, Boise. Right, we are looking at the reaction after the US launched Operation Midnight Hammer, which struck Iran's nuclear facility. Here we go. Right, charts up, just having a look across the board. We were looking out for a weaker session there, and we have it. Germany 40 down 0.5% there. FTSE also down 0.33%. Chris, what are you seeing on your screens?
Yes, just futures weaker, obviously compared to Friday's close, but clawing their way off the lows. And that's the key thing to bear in mind.
Yeah, they are coming back, aren't they?
Old FTSE 100. Now you think the FTSE 100 would do all right because if oil prices are higher, it pushes BP and Shell higher. That should be interesting. Keep an eye on those two names around the open, particularly. Very strong session actually. Just to go back, Chinese stocks Hang Seng at 1%. So really, they're not worrying about the close of the Straits of Hormuz.
No, you're right. And also paying attention to some of the airlines. I think I messaged you this morning. Like some of them were lower over in Asia, but then they came back. They came back after that.
It's a shrug of the shoulders.
Yeah. Let's take a look elsewhere and looking very. Just having a look there. Right. This is the FTSE there. Why did I hear Dylan in my ear, Phil? Right, here we are. I'm going to...
BP and Shell, 1.5% for BP, Shell 1.2% higher. So both those seeing a little bit of positive action on the open as the BP clawing its way higher after, well, not been a bad couple of months for BP from the April lows.
No.
Shell a lot better though.
And trader friends, I like this. You're seeing correspond with the chart that I made for everyone. So BAE Systems also up 2/3% there.
Company is going to be good because the assumption is this will lead to more defence spending. NATO talking about touching 5% and to defence and other elements. So really, really going for the defence spending angle.
Let's take a look at the red side of things. We talked about airlines earlier. Of course, the longer haul ones will be hit most, but the smaller, cheaper budget airlines are also feeling the pain. EasyJet down more than 2% there. IAG down more than 2%, Andrew McKelvey. And also we're seeing a lot of the defensive stocks as well lower there. Reckitt Benckies are down 8% there. Hikma is down more than 1%. Any big ones that pop out at you, Chris?
Interesting to see. Because there's no RNSs really of note this morning, so we're not really going on much in terms of corporate news flow. But otherwise, Entain down 1%, continuing a bit of weakness after last week's bounce. National Grid, always a bit of a safe haven, not seem to be participating in that. And utilities both down quite a bit. United Utilities as well down this morning. Otherwise, not much to say, really. Yeah,
let's take a look at Germany right now, crossing over to Germany. And we are checking in on the losers list first for you. Some reinsurers there down. Bayer also down 1% there. And we've got Siemens Energy down 0.8%. Mercedes-Benz, the car makers, also lower. Chris?
Sorry? I'm trying to do something else for accent.
Oh, I see. We have. I thought you were gesturing at me.
Just keep going.
Rheinmetall also down. We talked about this earlier. Rheinmetall, interestingly, also down 8% there. Let's have a look on the other screen there. We've got not a lot of gainers. Not sure why Total is there. I have to take that out of my watch list. But Commerzbank is up slightly, but not by much. Mostly, it's a red day across the board there in terms of the losers list. Volkswagen also down 0.33%, as well as SAP there. Crossing over to the FX space, just looking at the dollar first, because the dollar basket there, if I put that in my full screen there, it has come off a little down, about 0.1% there. Much of the reactions, this daily chart there, as easing right now. You heard Chris and I talk about, this kind of respite, this pause for breath as the world waits on either Iran or waits to see what happens with the Strait of Hormuz, this closure threat there. The investors nerves though, on a knife edge there. Looking elsewhere in the forex space, taking a look at euro dollar as well. That is easing off slightly too, and still trading in that 115, 114 space. And euro, that's the euro dollar. Let's take a look at cable right now, because that's probably a bit more.
A touch.
Yeah.
But this is not a market at all that's screaming panic.
No, it's not.
Dollar's unchanged. Gold is, where's gold? Gold is down. Oil's up a little bit as you expect. Stocks a little bit weaker. But this is not screaming full-on panic. It may change if Iran retaliates.
Yes.
Because then we would expect US response. Then we're back into this tit for tat kind of thing.
Yeah.
But at the moment, this is something that the market is taking in its stride. It's yet another weekend event where the market has shrugged its shoulders and said, okay, we can live with this.
Yeah, and on balance, it looks like they're saying, let's hang on a minute, guys. We are going to wait and see to find out what happens with Iran and the Straits of Hormuz. That's what volatility is also implying. If you look on the option side of things.
As Bloomberg's commodity editor says, it benefits Iran to talk about it, get some low-rank officials to go out and say we're going to think about closing it, push up the oil price. But what they actually wouldn't do is close, because that will bring the US down on your head. And as I say, angry phone calls from China as well, which you really don't need.
Yeah. Now, if Iran does disrupt Hormuz and the shipping that goes through there, then Commonwealth Bank, including many others, sees Brent hitting around $100 a barrel. But this is a big if. A lot of ifs and coulds and mays here still for the market. Right, let's have a quick look as well at some of the watch lists here. Let's have a look quickly to the drones makers, if we can. Just have a look whether there's any move there. Also looking at some of the defensives as well. And it seems like it's all kind of wait and see. EU and other defense stocks, having a look at that as well. Also not huge reaction there. It'll be interesting when we get closer to all sessions to see whether or not there are big moves higher or lower there. But at the moment, it seems that even on the indices, Chris, we're seeing those losses come back. It's giving back some of those losses.
Yeah, very much some futures just really pairing those overnight gains. In fact, if you look where we opened last night and where we are now, steady recovery. The Dow opened, sorry, the S&P opened down to 59.15. Where are we now? 59.60. It's very much a buy the dip. I think, who is it said, is it Rothschild said, buy on the sound of cannons, sell on the sound of trumpets, I think is the phrase. I'm sure someone
heard that
watching
one.
at home will know that. Yes, I think that's the idea, is that, again, if everyone panics on this kind of thing, it tends not to lead to anything.
So buy on the sound of
Cannon
and sell on the sound of
trumpets. I'm going to Google that, but someone else who I do.
Twitter friends, if you guys know the person that said that, please let us know.
Oh, it is Rothschild. Yes, sorry, there we go.
Come off my chart because I want to show you something quite useful. Right, we got the poll. Please, if you have not yet hit the poll saying either yes, I do you trade, invest with the IG platform, or I am considering it, or no, I prefer another provider, please let us know. I would like to know, and so would producer Phil and Sophie and everyone here too, because it's great to know who we're speaking with and how you trade and what you trade, because that just helps us serve you a bit better. Let's have a look at a really cool chart here. As I try and zoom in for you, this is the source is Kepler, and it's from Panmure and it's just a snapshot of the kind of global trade that goes through. This is if, I'm showing this to you because if we have any sort of hint even of disruption there, it's not just oil and fuel and gas. It's a load of other things. We've got minerals, we've got fertilizer, we've got chemicals, we've got cement. Not as big obviously as energy, but still loads of other things could be disrupted as well. Right, come off that chart, and we are now going to take a look at some of the comments that come through. Eric Jones, good morning to you. Gas is $2.72 in Boston. That's so cheap.
What's that in proper money?
Makes me want to cry. It's just really cheap.
Is it?
They have...
This is the key thing, US presidents, isn't it? The price of gas is the most important thing. If that goes up, Trump has to worry. So.
And also it varies state to state. Am I right, Eric Jones? It varies state to state. So that's not, it's not cheapest. I think it's even cheaper in Texas and places like that.
You just dig it out of the ground yourself.
Friar Tuck saying perhaps China and Russia have done their cost benefit. Nah, not many positives in doing it. Well, China is not.
Well, the Russians have no air defense systems to give because they've been used in Ukraine. The ones they did give Iran have been picked off by Israel. So there's. Would you like to buy more secondhand stuff that doesn't really work? No, I think we'll be all right. Thank you. So there were reports that China had flown in some. There were 2 Chinese aircraft that flew into Tehran last week. So we don't know what they were carrying. But at the moment, it doesn't look like there's any kind of sustained air bridge at the moment.
Did you see that other story at the weekend saying that if we do see this spike in fuel prices, then it could really, really disrupt the AI play because they need energy to keep all those
these big data centers going.
GPUs cool.
Yes.
Right, because not everyone can put them under ice and underwater.
No.
They have to be in the jungles of Vietnam, being kept cool by one man and a dog.
Everything is connected as ever, so we'll see how that goes, really.
Right. Andrew McKilvey saying, big shout out for the IG back office. They dealt with the GGP consolidation Friday afternoon whilst 3 competitors still working out. Thank you so much. A little applause there. We try and give you the edge and positive skew, especially when we can. Eric Jones saying, yes, lots of taxes in different US states. Right. Just talking about usefulness, let's have a look at some of the other movers. We got Rich dialing in any moment now from Milan because, of course, tonight is the big live trading options event after the one in London. Tonight is the one in Milan. So if you hop on that plane, trader friends, you can still make it. Not so much for Avi Fine in Tel Aviv. Hope you are being safe over there. But his flight was disrupted, so you can make it to London on Friday. Right, so just taking a look at Munich Ray for you because lots of things coming through on the headlines right now. Just checking and trying to filter that for you because whilst I've been talking about Avifine, it's been slightly buried there. So Munich Ray shares down 1.6% after Morgan Stanley cut it to underweight from equal weight. Chris, any others call out at you?
I hadn't seen any interesting ones actually this morning. Very
Let's have a look. I'm getting my
Swiss Re was cut by Morgan Stanley as well, so insurers not having a good start to the week.
Giving you a big bar there if you're looking at a giant mover there. Yeah.
Cement, isn't
yes.
this the construction?
Very good. I love you. You're very good.
I'm trying to think of a cement pun. Crumbling.
Chris, Beachy had some insight into most stocks that most people have not heard of. It never fails to amaze me.
Everyone's heard of Whole. Even I've heard of Whole.
Some people have not. What is it? The other day we were talking about diploma, and someone messaged me and said, "Is that to do with education?"
Yeah.
You know, lots and lots of these stocks that are, you know, really it's shares like really moving there. If you know, trader friends, let us know. Right, Rich is itching to go on. I hear all the way from Milan, so we are going to have him right after this quick break. But don't go away because I will be back. I'm going to go over and drag Matt Arbour here by the heels because he is going to update us on why volatility is so low and what that means for the rest of this week. So stay right there. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Welcome back, everybody, and a special treat for you this morning, live from, where are you, Rich?
I'm somewhere over the seas in the Milano,
Oh,
Chris.
splendid. Why are you in Milan? Tell us why you're in Milan.
Well, as if you don't know already, come on.
Nobody tells me anything around here.
We had a wonderful time on Friday evening. Saturday, we were straight onto that aeroplane, so across here. And this very evening, Mr. Beecham, we have our live show to about 300 Italians, and I'm told that 80% of them don't speak any English. So Sosnov has been practicing his Italian. He's actually on the Italian CNBC, much like yourself, likes a bit of moonlighting as well. He's on the Italian CNBC right now as we speak.
How exciting. Have you been translating all your options terminology into Italian? Can you tell us what a strangle is in Italian? Is that what...
It's going to be an interesting one. We have a translator.
I'll take that as a no, then, actually.
And the translator isn't any old translator. He's actually an ex-world ice skater. So he's
Okay.
very famous across here. So a lot of people are also coming to see him. But if you think of your kind of dancing on ice star, he is the Italian star.
How exciting. Oh, gosh. And have you had a good weekend in Milan?
It's been wonderful. Woke up to 20 notifications yesterday to ruin my Sunday morning of
Didn't we all?
our orange friend.
And what have you been seeing? What have you been seeing in Milan over the weekend?
Well, yeah, so Saturday evening, well, Dylan Ratigan's been fantastic. I think you've got him on the show later. He took us out for pizza. Him, Sosnov, and myself had a really nice lunch yesterday, long afternoon, eating pizza, as you should do, in the middle of Milan. And then this was the, this was the dinner last night. So you can see here, I got sat next to Ratigan. On the right-hand side next to Sosnov, on his left, that is Andrea. That's our ice skating champion. And then right at the back, that is two guys that work for IG Milan. And then Brittany, that organizes everything, and her husband. So you can see that pasta there was absolutely incredible. It tasted a little bit like carbonara, but it was just made with cheese and pepper.
Okay.
And that was our, there it is.
Oh, fantastic.
Oh, it was fantastic.
What about the cultural elements? What have you been seeing? Anything?
So yeah, the cathedral got tickets to go in and see the cathedral tomorrow, the Duomo, and then also off to see the Last Supper at the Leonardo Museum. So that'll be tomorrow as well. Now, a little bit of shopping, perhaps, Chris. You can't go to Milan without shopping.
No, you've got to go, really, haven't you? Tell us what about markets? What's your view? What happens now? Come on.
Well, it's a real, like, I saw your poll there, you know, who's an IG client. Of course, I had to hit the yes button, seeing as that's my real job as a client. So I think it's worth joining just to get the weekend markets. A lot of people were asking me on TikTok at the weekend how I knew what the US futures were. The weekend it's closed, it's not open. Well, it's open on IG. You can trade oil up 8%, and I most definitely did. The three of us sat at dinner last night, and oil should not have been up 8%. It was ridiculous. So I think that was a layup trade to pay for our Milanese food last night. So we shorted some oil.
So you think oil goes back down from here?
Well, I don't think it's $80 anyway.
No, fair. I think I agree with you on that one.
We talked for weeks beforehand that, look, oil's really stuck at that $67 level without anything big happening. Now, I'm not underplaying what's happened. You know, that was particularly concerning that he's gone ahead and do it. And like I was watching you and Ange earlier, I would be nervous being a holder of the S&P at 5,960, just waiting for the next headline. So I think still a de-risking is appropriate. I think the FTSE is a great place to be. You know, if you've got 11% of the index is BP and Shell, and then another 3% British Aerospace, another 4% British American Tobacco and Imperial Tobacco. I mean, that's what you want to be owning in a potential Middle East conflict. I don't think it's priced into BP or Shell. So I think FTSE shows its incredible defensiveness in this kind of situation. I would not want to be long the Nasdaq or the S&P at those kind of levels.
But so far, it's not exactly a volatile start to the week, is it? You've got the VIX that's dropping
this is
back
the thing,
down. Let's not dismiss it entirely, but it's not as if markets are particularly exercised in early trading, are they, really?
Yeah, but a lot of market players these days just do not understand risk. The complacency is off the charts. I mean, it's absolutely incredible because every time something happens, you're either saved by the central bank or you're saved by Mr. Taco or the market's flooded with liquidity. So I don't think we've been in this situation. When was the last time the US attacked somebody like Iran?
Well, the closest parallels you might have, if you look at maybe, I think the FT this morning was talking about looking at when it attacked with the initial attack on Afghanistan 2001, they got Iraq 2003, and then Libya in 2011. The short-term market reaction was mixed, I think, at best.
But Libya and Afghanistan, I don't think
well, there's no
comparable
comparison in that sense. But then you can argue that the past week you've seen Israel, this sustained air campaign, if they've partly neutered a lot of the Iranian response, and the message from Washington to Tehran has been this was a one-off if you don't strike back, because they know what happens. They know how this plays out.
But he's 87 years old, Chris. I mean, you know, his whole life has been dedicated to death to America. I don't think he just sits back and takes.
But we talk about
dropping.
Potential, and Trump talk about regime change or this kind of thing. But then there's a risk of if you do push them too much further, then there will be a much bigger response, and that could put the regime itself in danger. So the argument might be for, even now, might be for caution. I think we should underestimate the potential for nothing to happen in terms of a response, because they have to talk about it. They have to talk about, we talk about Straits of Hormuz. They might talk about closing it, but where they actually close it is another matter.
But how can nothing be a response?
Well, if you know the response to your response gets even worse, that's, I think, where you have to price in what can you do? And look at the past week, what the Iranian attacks on Israel have been limited at best in terms of their response.
But he can't stay in power, Chris. If he does nothing and just accepts, then his his rule over the people's gone.
Well, it is if you certainly respond and then the Americans respond and start taking all your military bases apart even more than the Israelis have done. The risk then is that the regime looks undermined in a different way. There's probably a no good outcome at this point for them. There's a
That's as soon as Trump came out and said unconditional surrender, then there's no good outcome from it. But
well, yeah.
What I don't think there is an 87-year-old supreme leader turning around and accepting embarrassment and shame in front of his people and his whole life's work destroyed in a bombing raid on a Saturday night.
Well, we have to see because certainly the market's just not going with that response at the moment, is it? Now, it could be
Exactly.
being far too blasé about this. We could be in a very different place. They close the straits, oil goes to 80 and beyond. Then it's in a very different world, isn't it?
Yeah, people seem to be particularly focused on that, but an attack on the U.S. base in Baghdad, if that's the headline, then they've cleared it out. They've given it as a freebie. They've said, look, we've got nobody there. You're not going to kill any U.S. soldiers. Attack us, and that's your option for a response. And we haven't had it yet, so I think that's interesting.
No. Well, it's now more than 24 hours. How many hours has it been? 24, plus 6, so 30 hours. No response forthcoming as of yet. You might argue that the command and control has been degraded. They don't have the ability to respond quite in the way they'd like as well. I think these things take time to organise. And then there was reports that maybe militias in Iraq could be attacking, and they were being lent on by the Iraqi government not to attack. So there are a lot of moving parts in this situation, aren't there?
Yeah, absolutely. And not to mention Hamas and Hezbollah, you've got for somebody that's meant to be the state sponsor of terrorism for the last 15 years, do they turn around and have no response?
Well,
I certainly wouldn't be putting risk on here, waiting for that headline.
Well, it's a limit, I think, because what you've seen in Israel has essentially dismantled that over the past 2 years of action. Hamas, Hezbollah put firmly back in its place with some pinpoint attacks. The pager attack, if you remember that from, was it a year ago when Israel launched those? So that kind of thing
Incredible
shows you that,
part of espionage,
the stuff they can do. It's clear message to Hezbollah, don't get involved. Because
this goes back to if you think they're really that weakened, then the regime doesn't stand a chance.
Maybe
it gets
anyway.
overturned.
Maybe that's what I mean. If there's no response,
so what does that look like,
out.
Chris? What does a regime change in Iran look like?
Well, I think obviously the worry is if you get regime change, you don't know what happens afterwards. If it's an internal uprising, it could be a different situation. It could dissolve into a much more unpleasant situation in Iran itself, with potential repercussions for the rest of the region. But this is the thing, if the message from America is your government can't really defend you anyway, then you would expect maybe some elements within Iran to be looking at ways they can topple the government. The sad thing, of course, they've risen before and got nothing for it. So there might be less appetite now, even with the regime's ability to control the situation being degraded.
Yeah. Now, talking about dictatorships, what do you think of this being done without Congress approval?
Well, I know there are a few congressmen saying that you can't do this. This is outside the boundaries, but he controls both houses of Congress. So you can argue that even if it comes to a vote, there will be very little impact from it. But it's again another sign of the way Trump continues to sort of just circle around the limits of what you can and can't do with the Constitution, and you just wonder at some point, when does the patience snap? Because a lot of people are prepared to back him on this and argue that it was a necessary move. But it does look like a violation technically of presidential powers. But that's not really bothered him before, has it?
Yeah. So the next trade, I mean, Bitcoin was interesting. I noticed somebody mentioned the risk-off element of Bitcoin. I think it must have dropped 4%, over 4%.
Yeah, we were down at 98, weren't we, overnight, I think. So it's a little bit of skittishness.
So I think that was a rather obvious trade. As soon as you saw the futures only open down 0.5% rather than the 1.4 they were predicted, then Bitcoin was still at 98,600. So there's those real mismatches with gold up 1% and Bitcoin down 4%. You're really making your play on, right, is it a risk off or is it a flight to safety.
Yeah.
So which one am I going to go? Ethereum was down 9, I think.
Yeah.
You know, Ethereum's much more of a risk trade rather than Bitcoin
it
is.
is. But what you see with Bitcoin is a lot of support coming through around that 100K mark. So as ever, the big round number, it's always fascinating to watch markets around big round numbers. There's definitely a bit of strength coming through. People are prepared to buy there. Or I missed it when it went through 100K. Oh, it's come back again. Now I'll buy it. So there's that psychology element really coming into play there for Bitcoin. And behaving mostly in line with how stocks are behaving, actually. So you've had a bit of weakness and then the recovery overnight. So the pattern's been very similar for both assets.
Well, shouldn't it be back to where it was then? That's an interesting. Why is it 2% lower when everything else is
maybe
within 15 bips?
Maybe it's a different element coming into play in terms of the uptrend. You had a big. It's such a strong bounce for Bitcoin over the past couple of months. Just not really seeing the news flow. Maybe the flows have dried up in the short term. We'll wait and see, really. Yeah. And Powell speaks this week as well, so that's another one to bear in mind. I think he's got testimony on Wednesday, Thursday, so let's keep.
Yeah, I'll be quizzed there. Talking about testimony, we do have a great trading show tonight. We're going to be up there, and thank you to all of you who came along on Friday. That was really great to meet people. Here was some of the trades that were done. So I think it was 39 trades in just over an hour. And you could see there was we've made a bit of money. I think we were up about $500-600. Made some money on First Solar. We traded pretty much all the Mag 7. We traded a bit of short oil, which was looking a bit. Sosnoff wasn't best pleased last night, but he said we'll certainly be trading it again tonight. And then a bit of a pairs trade on long. Russell 2000 against short S&P and Nasdaq. So really good nights. Certainly full of action. There we are. It was certainly a warm one. I had to give fans out at one stage. It was so warm in there. Producer Phil was an absolute gent. He actually went and got us all iced waters, and I took them and gave them to the guys on stage.
Yeah, so sound like he had a good day. Oh, there he is. There's producer Phil doing his thing. Oh.
Big shout out. Yeah, which one's producer Phil? The ones with the big arms or
Take your pick at this point.
But it was really great to see anybody. We had Julian there, we had Pelican there, and away from the numbers, it was a whole heap of our friends of the show. Came along, and it was really nice to see everybody again.
Excellent. And you all made the flight on time. That's the key thing.
And the flight was easy one, and really short flight actually. I didn't,
It's just a hop to Milan, isn't it? Good. Oh, I think is that our time up, studio? Oh, there we go. Well, have a fantastic evening. Enjoy your enforced stay in Milan.
Isn't it terrible?
We feel for you. And I think we're live next with Angeline and, of course, Matt Arbour. So see you then.
Do you want me to come back tomorrow, Chris?
Do you know, you asked the studio. They never tell me anything anyway, so it'd be a surprise.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends. Somehow or another, the gallery have decided they'd rather have all of your beautiful hair on. Did you see that? It came on, it was just you.
Well, that seems appropriate. That seems appropriate to me.
Very appropriate.
Well done, the gallery.
On a day like this.
Finally seen it.
Is that what you're doing? Talking to them, handing them a £50 note? Is that?
Oh yes, yeah. Greasing the gallery, greasing the gallery's palms. Morning, Ange. How are you this morning?
I am good. How are you? Good to see you.
Yeah, good. Kind of surprised to see a benign response in
Benign. Volatility
once again.
still low. Implied volatility low once again. Our market's just shrugging it off.
Well, yeah, Europe sort of doesn't really care, but the fact that even the price of crude,
Yeah, we
know,
talked about
that's,
this morning.
the spike last night, but not a lot there really when Europe's come in. There's no panic in the market at all.
No panic. And also, what's interesting too is that they could look at the indices we opened as trader friends. You were with me to open that, and they were looking lower. They were all in the red really, but look at it now. It has since come back, and we are flat to higher.
Yeah. Germany, UK, just really no response at all.
Yeah. All this talk about, US involvement, those pictures of the weekend, right, should heighten risk aversion, but markets are actually telling a different story.
And these are on the back of quite strong up moves, certainly in Europe on Friday, going into those closes. It's an interesting one.
Do you think that this is a message, the fact that, equity markets remain so resilient that, this is supportive of the whole, we're still risk on?
It very much so. It's almost as if investors have had so many close shaves with geopolitical events that haven't resulted in negative moves. There's got to be something really firm to make them become risk off.
MSCI World Equity Index only roughly 16 points below a record high. And in a time when war would usually, might I add, trader friends, boost, the US dollar. Let's have a look at that. It's
US
really...
dollar was stronger, wasn't it? The dollar
look,
was still
it's come
strong,
off as well.
Yes, it's come back.
Yeah. So where do we sit now? Let's have a look at the option side of things, because we were talking about this morning, and I said that it looks as if nothing else happens from now, we keep calm, carry on, and markets go its merry way. But it seems like, if something happens in the Strait of Hormuz, then
well, that would be the expectation. That there's not really that huge uptick in volatility at the money on the US is slightly higher than it was at the start of last week, but not we're at war. Higher kind of level. Puts.
I mean, look, it's if not, it's fallen back.
Yeah, we're less than 20% at the money, which is. This is yes, okay. We were tending down towards sort of low teens middle of last week, but this is not a market that is fearful of action.
No.
Possibly it's telling us something that maybe investors believe that the world has moved away from reliance on oil, which is, of course isn't actually the case. But that we're not talking the 70s here, where there's a huge oil price shock, and that this is the fundamental shock to an economy that it could have been then. But it's still a very, very real thing, and it's very real for the consumer.
We've got some comments coming in thick and fast. I'll wait for the numbers. Neil saying, Rich, with you expect the response won't come by the usual combat routes. Worrying. And a person, loving that handle, a person. You're new to the chat. Good morning to you. In the States, investors are not that scared if Iran will retaliate. Those of you that haven't just yet, just please hit the like and subscribe button. And also, if you haven't already, do you want to read out the poll that we had earlier this morning?
Do you trade invest with the IG platform? Yes, I do, 67%. It's a strange question, that. I'm considering it 20%, and no, I prefer another provider, 12%. I don't know why we asked that question. There we go.
Those of you that do trade with us and were with us on Friday night, and I met up with you, thank you so much for coming. I will be showing those pictures a bit later on. A person saying, good morning. This whole sort of shrugging off, right, by the markets, also coming in an interesting time, because for all the trepidation, for all the fear that was talked about when we had that big, beautiful budget bill as well, about the US, right, the gaping fiscal deficit, that also seems to have kind of gone away.
Well, yeah. Fiscal deficits are always being forgotten, aren't they?
Yeah.
Particularly in the US. Yeah, it is a strange sort of semi-world where markets are shrugging everything off. I wonder, talk about retaliation, what form retaliation takes. I hesitate to think and talk about such things, but if retaliation were to happen on US soil in a kind of terror attack, what kind of reaction we see there?
Yeah. We got a person asking if Tasty Trade, does that count as the IG platform?
It's an interesting question.
That is an interesting question. I hear another poll. I hear another right. Let's the producer Phil says no more polls. We're going to move on. So
I was going to say we have seen, I suppose, at the individual name level, that the usual offenders, the airlines are slightly lower, but not hugely. Oil stocks tick slightly higher, haven't they? But nothing that one would really suggest is out of the ordinary here.
No wild moves.
No.
Having a look at IAG as well, because that was lower earlier on.
Yeah, who suspended flights, didn't they, as well? They were stopped flying to...
yeah, even then it's come back off now. It's just down 1% there. And also taking a look at, we saw EasyJet just now, which was lower, but Ryanair also... also easing back off now, just down.
But just 1%. These are not the kind of moves that one might have thought. Certainly on Saturday morning, waking up and seeing,
Did you see it? Because I had a horrific because I think Chris had was awake long enough. It was a long week last week, as you all know, with the Tom Sosnoff and Bat here. And so producer Phil, myself and Rich, we had 3 consecutive days of like late nights after very early mornings. So I was going to bed really early at the weekend. Chris checked prior to going to bed and saw that this is happening. I woke up to images being sent from my friends in the Middle East. Plumes of smoke, and not something you want to wake up to. No. But that was the start of my morning. But yes, and Iran and Israel still exchanging strikes this Monday. So tensions still remain high. I mean, don't get me wrong, this is a very, very serious situation, trader friends. But what we're talking about here, Matt and I, is the fact that we are seeing, almost like a lack of volatility here. Bucking the mood though, oil and gas.
Yeah.
Right. So let's have a look at that. So Shell, and this in part is probably boosting the FTSE as well.
But still not the kind of moves that one possibly would have hoped for or would have thought for if you're.
Yeah. It certainly isn't as big a move as the tariff tantrum in April.
Yeah.
So. Vol at that time when I was looking, it was like 30 at one point. So BP.
And whatever happens, I suppose the price of oil, higher oil prices, inflationary. These are still not great things at the macro level. This is not what anyone wants to see, I suppose, apart from Jerome Powell to say that he's right still, that he's the man who is seeing the economic shocks and has his steady arm on the tiller.
Yeah, and take a look at that now, trader friends. US Tech 100 is now up 0.25%. Wall Street's in the black now. And so is, Germany 40 almost
near as, it's surprising. Yeah, and as I say, that was on the back of Germany. Germany 30 was up, 300 points on Friday on optimism that there weren't going to be any strikes. So it's sort of slightly perverse, but that's all these things provide opportunities for traders. There's the differences in opinion. When you're scratching your head about something, often that is where the opportunity arises.
Some interesting ones this morning, trader friends, if you know the reason for it, because I can't seem to find a reason yet. Do you like chocolate?
I like chocolates.
Oh, good. I love chocolate too. You a milk chocolate or dark chocolate kind of guy?
I do like a sort of Lindt, sort of 70% kind of dark, that kind of.
Oh, very
taste.
posh. Very posh. Barry Kayabo, which is pretty much in every bit of chocolate, whether it's the stuff that you buy in the shops in your WH Smith or in
WH Smiths. Who's buying chocolate in WH? Who's shopping in WH Smith?
I get suckered into the, just before a flight or just before,
at the airport.
Yeah, you wander in there, and then I don't get suckered by all the merch and whatever, or the magazines, or I get suckered in by the chocolates. I know it's an expensive place to buy it, but it's just something that I do. Barry Kayabo shares down 2.5% there. So I don't seem to see a reason yet, but let me know. Interesting too, given that it's down by so much, because in good times and bad times, people still need to eat chocolate.
Sell stocks, buy chocolate.
Yep, sell stocks, buy chocolate. HelloFresh is the other one that is moving a great deal, down 2.3% and now 2.2%. Let's add that to the workspace there. HelloFresh, of course, the one that sells those boxes. And I can't yet see what is behind this move, but it is down more than 2% there. Trader friends, if you know, please let us know. Even gold is substantiating or supporting that lack of volatility, lack of, no one seems to be running to the exit.
No. I think it's sort of the tail end of Rich's chat there, sort of crypto, and suggested there was a bit of a risk off sort of towards the end of the trade on Sunday, but that's bounced back a bit. Like the Bitcoin came back off 100,000, but it's stabilized again. So there's nothing really. It is interesting. It's an interesting reaction.
And for those of you looking for some movers, also just want to show you Novo Nordisk there, because I hope we've got Ronnie Eggnog watching, because he likes Novo. It's down more than 2% at the moment after its updates on some of its drugs at its 2025 ADA meeting. So that is quite a big move this morning for Novo. It's coming back up right now. But yeah, it's a really interesting day, because I woke up super early thinking that it was going to be all over the place.
Yep.
And actually, it's now feeling more and more like an average day.
Very much so. Yeah, I suppose you got some US PMIs this afternoon, although the Eurozone PMIs, which are often good for a bit of volatility in euro dollar, didn't really kick anything in earlier. So it's sun's out. People are not trading. That's it.
Tell us, trader friends, do you trade more or less when the weather is good? We would love to know right here, because maybe there is a point.
Well, it's always the assumption, isn't it, as you move into the holiday season, that trading lessens, markets get thinner, markets certainly get thinner. The summer lull, which often results in the sort of larger shock we've the past God knows how many summers there has been a large market move, an unexpected market move, perhaps triggered by liquidity rather than macro events. But it's always the not get lulled into the vol being lower in the summer months. You know, we all remember August the 5th last year, which of course was you missed out that whole day. Nothing had happened. Markets were off sharply and finished unchanged. But these kind of moves can happen.
Yeah.
When people aren't trading as they appear not to be at the moment.
Yeah, it's interesting to see, because, you know, then you think, what is it going to take for markets to really, you know, price in a huge amount of volatility? Even the tariff talk, Chris and I were talking about this, even the tariff talk seems to have like disappeared, you know, kicked into the long grass. Now everyone's just watching Iran and that's it. But
when's the 90 day? When's the timer?
It's not.
It's
not
next
too
week.
far. Yeah, it's not too far. It's not too far at all. And here we are. And it seems like the world is now just interested in Iran, and also prior to that,
but not interested in Iran.
They're not interested. The markets are not interested in Iran. Speaking of which, we talked about Straits of Hormuz quite a lot, and also the impact on oil, obviously, and energy. But taking a look at the metals space predominantly, aluminium seems to be outperforming copper on energy cost concerns at the moment amid these tensions.
Aluminium is the most energy intensive one there, so
yeah,
riddle me that.
Yeah, I mean, it's just so weird. It's so strange. Elsewhere, we also have a week when we've got some key data points coming through. Which one is the top one for you?
You put me on the spot. I'm not going to have my full week's list now. Show me the list, and I'll give you the reprise.
I think we've got one of Beachy Head's favourites, which I'm being sarcastic here because he doesn't like it.
Bring it up on the platform, Ange.
Do we have the slide from last Friday? Otherwise, I'm just going to...
Just bring up economic calendar on the platform. It's there.
I'm just going to read it out. No, then you have to kind of like go through every single one. But here.
You can select. You can use your toggling.
Next
just
7
put it onto
days.
US and then high.
Yeah. It is already on high.
You just only high. Select only high and then US. Learn how to use your radio buttons.
I've got the.
Okay, the PCE.
Yay.
No, you can't ignore the PCE.
I bought you time, producer Phil. There we are. Yeah, it is the PCE.
It is the PCE.
One that Chris hates.
Well, yeah, it fades in and out of fashion. This is either everything or nothing.
Yeah.
I think sitting after, I don't know which testimony that is for Powell. Like these very much vary in importance, but that should be the dominant there. Although his tenure. He's got about a year left, doesn't he, on his tenure? Strange behaviour I read in across the bond futures across. I think it's April to May, or it might be May to June, where everybody is trading on Powell going and the new guy coming in instantly cutting rates in June.
Didn't Trump say that he should head the Fed at one point?
Cronyism, I'm sure, will be involved.
System Pro FX chiming in, saying the markets do not need a bloodbath. And also, this is a morning bounce. Monkey Man saying dark chocolate. Used to love dark chocolate bounty. Oh, I do like that as well. Especially the ones that come in doubles.
I like the bounty, though.
You don't like bounty? You don't like coconut? No. Yeah, the dark one is good. Pelican is back. Good morning, Pelican. Pelican was one of those at the event on...
Met in person.
Yeah. Amazing stuff. Pelican also talking a huge amount. You should come on, Pelican, talking about how he trades momentum and how options is a revelation, right? And now he would like to do it full time if he can. Pelican has got extensive experience in construction, trader friends. So if you need any of that good stuff done, please contact Pelican. Steve Davies, good morning to you, saying poor old JP.
Yeah.
Back in the unwanted firing line. I don't think he ever left the firing line.
No, I think JP lives with it every day, and he's...
Yeah. Maturin there, saying hi everyone. If you'd like to join the other 40 trader friends on our Discord group, Maturin, I think I need to collect royalties on the trader friends. They've called it trader friends. Please, which is my handle. Please send me a friend invite, Matu03, and I will send you a link. Thank you very much, Maturin. They're very civilized, they are. They don't comment when the show's on. And the moment the show's off, they then...
Okay.
Thank you everyone for being civilized. Producer Phil also says thank you.
If I like that, now we're post the summer solstice. Of course, it's all downhill now in the UK. Daylight just
don't
diminishing.
say that. Please don't say that. I love the sun. I love the sun. Taking a look elsewhere, we also had Spectrus jumping earlier on, approving Britain's biggest takeover after investors proved Britain's biggest takeover this year. We also, I mentioned earlier, Holcim. Holcim was down a huge amount earlier. Let's have a look at this. Right now, still down 42% after completing the Almirez spin-off. I hope I've said that right. But elsewhere, it is looking...
it's struggling for stories on a morning. Well, I didn't think that would be the case. This is very much the case.
Indicative of what we're seeing on the markets at the moment. But really, just a reminder, trader friends, after the strikes and potentially those, you might have woken up to those pictures like me over in Iran, and 3, not 1, not 2, but 3 places were striked. I'm going to try and not mutilate the names. They were the Iran's nuclear facilities at Fordo, Natanz, and Isfahan. They were struck after the US launched the Operation Midnight Hammer. But as you can see here,
Midnight Hammer. Where do we get these names? Take
us through the reaction so far. We've seen now Germany 40 tipping into positive territory.
Well, yeah, completely in positive territory. And yeah, as I say, that's kind of the stranger one, because its move was so positive on Friday on the thought that there weren't going to be strikes. Obviously Friday we had expiry day. A lot of these indices, the expiries were close to highs, close to day highs. Certainly we saw that on the US. Everything came back off following the expiries of June contracts. So possibly less surprising that after that sort of expiry sell-off and a bit of a bounce there back towards, like S&P back towards the 6,000. Obviously the expiry was above 6,000. But yeah, it's Europe, which has oil dependency and geographical proximity. It is a strange reaction.
Yeah, strange reaction indeed. And we are going to head to opening bell. Obviously, I'd love for you to, this for all sessions. I'd love for you to stay, but I know you're a very busy man.
Very busy man.
Yes, he is a very busy man. And so we have all sessions next, and Dylan Rattigan all the way from Milan. So do get coffee, but keep this on. Go and get your toast and come back on, because we will also be showing some pictures from Friday night. We're from our trader friends. All right. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks.
Always trade within your means and never risk more than you can afford to lose.
Hey, trader friends, welcome to All Sessions. We count you down to this space. How many seconds have we got to go? 10 seconds, and I've got the bell right here. This is where you can take a position ahead of the US Open. Here we go. 1. And we are off. Trader friends, let's have a look at how it's shaking out. European markets and US markets, at least the futures, are all edging into positive territory. And just taking a look at the all sessions as well, because what we are seeing here is monumental. As you heard Matt Arbour and Chris Beecham and I talking earlier on, what is essentially a risk off day has become risk on, and we're seeing markets, relatively shrug off what we've seen so far. Just taking you through the winners list first. We've got Tilray up at the very top, up almost 3% there. But we also have Tesla up 1.4%. Monkey Man, Neo also up more than 1%. Beyond Meat, that one's really volatile. So, bear in mind if you trade that, and it has been on the down for quite some time. ExxonMobil up 1%. No surprise there, given that we've had a lot of the oil majors gain on the scenes that we were greeted with at the weekend when the US struck Iran's nuclear facilities. JD.com also up higher, 0.8% there, and Hims and Hers up 0.5%. Switching gear to the losers list, we got Novo Nordisk there. This might the move there down more than 3%. This is all sessions, might be down to that ADA update that it had. So look up for that. We've also got Riot Blockchain down 1.5%, and also IonQ and MicroStrategy down there. It has to be said that we're seeing extreme moves in Bitcoin and Ethereum as well. So if you're trading that space, do put your gloves on, trader friends. Elsewhere on the losers list, we've got Merck and Co. down 0.25%, and Coinbase is also down 0.2%. But really, just checking out some of the commodities for you. We are seeing relative calm here. Oil is now flat. This is WTI. And we're seeing it trade at that 73 level, $73 level. And in terms of Brent, a similar picture there as well. It has since come off what we saw earlier. Also, gold showing us that it is easing off, and we are seeing this rapid ahead further into safe havens like gold there. In fact, what we're seeing is a bit of a mild correction there as markets await more information from Iran, which has kept quiet so far, and also the US, because we are looking out for details and update as to whether or not they managed to really disarm those nuclear facilities as they had hoped. Lots of aerial pictures, but no confirmation just yet. Right, we are going to get Dylan Rattigan on the line very soon. Tell me, producer Phil, how we got him on the line just yet. Oh, he's here. Amazing. Let's get him on the line right after this quick break. Any questions for Dylan? Slam them right here, and don't forget to hit the like and subscribe button, because then we can do more of this cool stuff for you and bring you live in the moment moves on the market.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey. with retail investors now able to buy, sell, and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, trader friends, welcome to the show. And we are joined by Dylan Rattigan, all the way from Milan. How are you, Dylan?
Never better, never better. Nice to see you. Good morning. How are you?
Good morning. I bet never better. We saw earlier on the pictures of that amazing restaurant and the pasta. When
you know, a little cacio e pepe never made anybody unhappy. Can I just make one other comment before we get started?
Yeah. Go on.
I would just like to say good morning to all of our trader friends. Good morning, trader friends.
Oh.
It's nice to see you.
Dylan has asked me a really interesting question. He asked, do you have any trader friends who are not friends? And actually, the honest question is no, because they are such a wonderful bunch. They're all friends because they do come to our events to see us.
Mm-hmm. They are legitimate friends. We're going to see a bunch of trader friends tonight at the event in Milan, I do believe.
Yeah, amazing. Give us a roll call of what's happening later today.
Well, it's already happening. The festivities have already begun. Tom Sosnoff, as we speak, is with Andrea Vetturi, who's one of the greatest figure skaters in Italian history, and who's also one of the biggest tasty traders in the world. He runs a huge trading group here in Milan. And so Andrea has arranged for Tom to be a guest on CNBC Italy. And so they are in the studio at CNBC Italy as we speak, helping people understand the tasty methodology and the tasty sort of logic. A lot of folks, I think, really come to this with an idea of trading as a purely directional action where it's an opinion of what will go up or what will go down. And I think that what Tom teaches, which is really important around both risk management and also the ability to sell options and sell options premium as a way to add a second component of return without being so dependent on directionality. I think that's it's sort of the next level of trading. And I'm hopeful that as many people as possible get a chance to learn from it and enjoy it, and obviously they did in London last week, and hopefully they will as well tonight in Milan at the big event. And then the big event is tonight, 6 p.m. Local time. Doors open at 5 p.m. So here at a venue called Fabrique, which is a nice location just on the eastern side of town. So Tom's over doing TV now, and then we're all heading out to Fabrique this afternoon. Nice. To welcome the Italian and non-Italian trader friends.
And how many are you expecting?
It looks like it'll be somewhere 300 to 400 folks, which is a nice group. I don't think it's as big as the London groups or some of the American groups, but I think for our first time in Italy, it is a more than honorable showing. I wished Tom the Italian catchphrase for good luck, which is in culla della balena. So when the Italians are wishing you luck, they say in culla della balena, which it literally translates into in the ass of the whale, which is a peculiar way to wish someone luck.
Yeah.
I understand, but I mean it is what it is. And so if you're looking to sort of get on the Italian bandwagon and you want to wish a friend good luck with a little Italian flair, don't be afraid to just toss off a little in culla della balena if you're wishing well for a trader friend, as I am for Tom this morning over at CNBC.
Incredible. And just to highlight, we have trader friends from London flying into Milan because they are watching the show right now, and they've said that this morning, which is fantastic. Make sure you corner Dylan, you corner Rich and Tom as well. Take a photo of them. So this is what I mean. We met a load of our clients there, and please continue telling us what you want, because That is the best thing for us. And also I'm going to try and get some of the other pictures. Phil was a legend because he was at the door with me, and he was getting people to sign up to trade live with IG. Those that don't already watch us, his technique was unbelievable. He kept on saying, yeah, everyone said, but I've already checked in with Angela. Like, yeah, that's not the real thing. You have to sign up here. We're not letting you in. Which please like and subscribe here if you enjoyed the event. Here's another one of our trader friends who watches us every morning. Call out to see that lots more females this time round compared to last year. That's a view of the stage, trader friends. Thank you so much for braving the heat, because if you thought it was hot outside, it was even hotter in that venue. But boy, was it worth it. Here's producer Phil, myself, and another one of our trader friends who watches the show. You know who you are. And here, Adam Deleuze also came to the event in a full-blown suit. Well done you, because it was really hot. But yeah, everyone loving the directional, as you rightly say, directional way of trading, which gives us an added edge on the markets. Right, let's come off those pictures now. What is the first thing you will be doing and showing our trader friends when you open up the show today, Dylan?
Well, I think the first thing to understand is everybody sort of gets so keyed up on the technical aspects of it and also the financial aspects of it, which is obviously the heart of the beast. And I'll let Rich and Tom handle that. But I think that there's another layer of this that is really, really useful, even if you don't trade big and even if you don't trade that successfully, which is if you trade at all, which I really think is something that everyone should do, even on a tiny account. It is that the only way you can really understand risk is if you are at risk.
Yeah.
And what I think people underestimate is that they think that risk exists as a very explicit thing that's in the financial world, but they don't integrate the idea that your whole life is a risk.
Totally.
And that being a live human,
breathing is risk.
If you're alive, you're in an at-risk condition. And the mistake when you're in an at-risk condition is to try to either deny that you're in an at-risk condition, one, or to try to avoid it and say, I'm not at risk. And it's because both of those put you in a position where you have no control over the risk that you have. Whereas when you understand that you're in an at-risk condition at all times, you also then are much better qualified to then seize opportunity, whether it's financial opportunity or whether it's life opportunity, because every place that risk exists, risk is a red flag that shows you the green flag of opportunity. And if you understand how to manage risk, then you also understand how to manage opportunity. And I think that what you learn in the specifics of the technicality and the financial part of trading is something that actually philosophically could help with all life decisions in recognizing risk and managing that risk, and then also using that risk as an identifier of where the opportunity exists in your life outside of the financial world. And I think that is an overlooked component of this entire experience. And I'm going to try to emphasize that when we talk this evening. So I'll kick things off with a bit more of a philosophical discussion about life, and then we'll get into the weeds with the live trading with Rich and Andrea and Tom.
And that is such a great thing to kind of teach the audience too, because most people come at this and they almost like fear risk, right? But it's about understanding it, understanding the mechanics, and also not being afraid of it. And speaking of strategies, I just want to revisit the strategy that we talked about last week. You love oil, short it, dollar, buy it, bond, buy it. And have you called your mom?
Call your mother.
Have you called your mom?
Call your mom. You always got to call your mom. So, you got to first you put your trades on. You got to get short the oil. You got to get long the dollar and the bond. And then after you do those three things, then you got to call your mom. And then you just got to wait for the money to come flying in. And then when you get the money, you should probably buy your mom a present.
And the oil short definitely working there. Also wanting to pick your brains on the current status of markets, because, earlier on at the weekend, everyone must have woken up and saw those pictures and thought, oh dear, it's going to be a bloodbath, right? On Monday, you know, what's going to happen. But actually, essentially, if you held fire and just traded the fact or watched the fact unfold, we're seeing the markets shrug all that off, at least right now. I mean, take a look at that, Dylan. It's not only shrugging off, but we've come from opening slightly in the red to neutral, and now we are seeing markets. I mean, the Germany 40 is now up 0.1%. FTSE also higher. Not a surprise there, given we've got BPs and Shells. What do you make of all this?
I mean, this is all the more validation, I think, of my argument to be short oil. The market is extremely comfortable with the level of conflict, even with the U.S. intervention over the weekend. The market does not believe anything that is substantially disruptive to the global economy or to the global energy markets is at risk in the context of the conflict environment that exists right now between the United States, Iran, Israel, and any other sort of allies in that area. It's obviously extremely kinetic right now and tragic. Tragic for the human beings that are in Iran, tragic for the human beings that are in Israel, tragic for all the people that are exposed to it, all of whom, in my view, outside of the governments of these countries, are entirely innocent and largely good people. And so the good news, I would say, in a horrible news environment, is the market's comfort with the risk that exists. If the market was concerned that this was going to spiral into a substantially murderous war, it would not be this comfortable. And so I do believe that the market is saying that it believes that this will remain extremely targeted, extremely limited in scope, and will not spiral into sort of all the catastrophic fantasies that are available to all of us when we read these headlines about, well, what about this and what about this and escalation, this and this and this. I believe that the market's behavior provides a great degree of comfort relative to its perception or what it's communicating about the probability of a truly catastrophic spiral. And then coming back to the financial side of it, it's very much the basis of my logic in arguing for that oil short over and over and over again.
So where is the Dylan red flag? Is it when the Strait of Hormuz has issues just whacking this up right now? This is what I came in early this morning to crunch up for all you trader friends. You know, is the red flag where if we have disruptions on the strait, or is it Iran coming out saying it's going to do something?
No.
What is the red flag for you?
No, for me, the red flag would be when an Iranian ally, Pakistan, maybe Russia, enters into the theater in a way that then delivers an attack on critical Western resources.
Right.
Which, you know, and so obviously the Straits of Hormuz has been a decades-long source of fear-mongering and all the things. I believe that the Iranian regime is going to focus all of its retaliation on Israel. I believe they're going to do that for two reasons. One, I believe they think that that's the only safe retaliation that they can execute without inviting substantial
aggression,
escalation from Western powers. And so if you're sitting in the Iranian war room and your choice is to bring in an ally, Pakistan or Russia, and uncork something on substantial Western resources, whatever that may be, military bases or Western cities for that matter, or the Straits of Hormuz, then that is lights out for everybody on the other side. Whereas if they focus their retaliation on the aerial bombardment of Israel, they already know that is sort of that there's a tolerance for that in the West that doesn't invite substantial escalation. And I do believe that the most likely outcome here is a continuation of as much aerial bombardment as they can muster out of Iran towards Israel. Israel's doing, by all reports, an extremely effective job of neutralizing jeopardizing Iran's ability to really do that pretty quickly. But the thing, the red line or the red flag that you referenced would be a significant third party stepping in on Iran's behalf and working with them to strike core Western assets, which would include the Straits of Hormuz, in which I don't think is going to happen.
Right. And just checking in on some of the headlines coming through right now. We've seen is Iran's supreme leader asking Putin to do more after the U.S. strikes. China saying the U.S. attack on Iran has damaged its credibility. We have seen more airlines as well looking at Middle East cancellations after those strikes in Iran. Overall, though, after a brief dip amongst Asian stocks and currencies as well, we're starting to see this stabilization that is going on, especially across Europe. And Dylan, what is the mood music like there over in Milan in Italy? What is the, I'm sure you've spoken to loads of people. How are they feeling after seeing all this on the TV at the weekend?
I mean, everybody kind of goes through. I don't think it matters whether you're in Milan or London or New York or, Cape Town. Everybody kind of has the same experience, which is sort of, elevated concern, fear, anxiety, probably some catastrophic thinking. What if the sort of second and third order implied potential actions, and sort of the fear that obviously can generate. But as you move past that initial shock and anxiety, I think that it very quickly sort of mellows into more of a sadness for the tragedy of the world situation. And so that I think as the anxiety subsides, that it really transitions into a sadness and a compassion for the people of Israel, for the people of Iran, especially for those two countries. I think that in 2025, the idea of using explosive devices to blow up buildings and kill civilians is profoundly idiotic. And I think that's obvious pretty much to every human being on Earth at this point. I mean, it just is the least productive concept for problem solving that I can imagine. So I think that creates, it goes from an experience of great anxiety and fear that then pretty quickly transitions into a sense of sadness and compassion, and particularly, like I said, for the people in both of the primary countries that are involved in this conflict.
Yeah, same here as well. I mean, Trump has talked about and raised the question about regime change as well in Iran, right? And he was on Truth Social writing that if the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change? But do you think this is actually what, the U.S. really wants, or the Trump administration wants to change the regime there? I mean, can they actually invoke that if there is essentially no other regime to take over at the moment?
Yeah, I mean, I'm not going to speculate on what the Trump administration wants. I think that, the thing with regime change is in the world of magical thinking and fantasy, it is the most appealing concept, right? If only there was different leadership in this country or that country, and then people look back and they're like, look at how Iran was in the 70s, or look at how this country was. Look at it's easy to do that. If you talk to any of the more qualified military analysts in the United States, toppling a regime, as America proved in Iraq, is relatively easy, especially for the United States, which has overwhelming military capabilities. However, you bring up the only point that matters, which is everybody's also aware that once you've knocked the regime over, you're more likely to end up with a Libya, which is an open slave trading tribalism chaos, which was a regime change effort by the Obama administration, or Iraq, where you ended up with ISIS, which was a Bush-led regime change operation. I think one of the bigger concerns that I personally have right now, just in observing all of this in the context of my expectations, which obviously are just mine, but Iran has been centrally influential in stabilizing Iraq.
Yes, and
And
Iran,
the reason that
say what you
ISIS,
like about the regime. They
yeah.
are a stabilizing factor in the region as well.
And so the biggest risk, I think, of this whole situation, outside of the obvious risks that to the two countries themselves, and then whatever escalatory sort of probabilities are, which I think are low, but I do think that there's this does have the side effect of potentially significantly empowering ISIS in Iraq, which I think would be the one most sort of highest probability unintended consequence. And ISIS is more nerve-wracking, I think, for everybody, because they really function as a asymmetrical global terrorist network more than they function as an organized government regime. And when you're dealing with an overwhelming counterparty in a military environment, which the United States obviously is the most overwhelming military counterparty in the world, and Israel's not really that far behind in terms of their capabilities. When you're dealing with a overwhelming military adversary, the most advantageous way to engage with them is not through direct engagement, but is rather through asymmetrical, stochastic terrorism. And so I think the biggest risk to all of us right now is not so much some grand retaliation from Iran or its allies, but rather that the degradation of Iran empowers ISIS and its organization in Iraq, which then fuels a higher frequency of stochastic or random acts of terrorism, which I think is a higher probability than any major retaliatory action, outside of the fact that I think Iran will continue to do everything in their power to deliver ordnance into Israel, which I think is going to be increasingly difficult, because literally every time Iran launches something, they end up identifying their launcher, and Israel's extremely effective at using basically Israel's saying, launch everything you've got, the sooner the better, because every time you launch, we identify your launch location and we neutralize it. And so you've seen the number of missiles coming out of Iran collapse in number just in a matter of days, just by virtue of that exact fact, which is Israel is very effective at identifying the launch locations once they have been utilized and rendering them inoperable.
And this is a really key point here, and you can remind Rich that I said this on air, because he poo-pooed back in back end of last year, poo-pooed my defense call and said, you know, no one's got money for defense. No one's going to be able to, you know, it's not going to happen. And I said, no, defense, we're in a super cycle, baby, whether you like it or not, because, you know, things are just going to get more uncertain, not less uncertain. And once we're seeing the stabilization, Dylan, or like markets relatively shrug off what's happening in Iran, what you're seeing in RSAX, and have a look at this, is that, you know, I'm showing you the Northrop Grummans of this world, right? Take a look at Lockheed Martin as well. Lockheed is one that trades all sessions here on the IG platform, and it is up 1%. So whilst you see gold ease off, you see commodities like oil ease off, we are seeing the defense names that are instrumental in this modern warfare take up. Let's take a look at Palantir, which actually are the eyes of many defense software weaponry. It is also up more than 1% there. Palantir still above that Ichimoku cloud as well. Also, we had NATO earlier on. I think the comments that were coming through this weekend is that they were looking to perhaps boost their spending as well. You are about to possibly also see some updates later on. Dylan, you waiting for, I don't know what time will be your time, but here I've been hearing on the grapevine some press conference that's coming from the States in the next few hours to update people as to whether or not they struck those targets and disabled them. These are the 3 nuclear targets in Iran.
Yeah, I mean, there's a lot of skepticism to that fact.
Yeah.
You know, obviously there was some degree of degradation, maybe a substantial degree of degradation.
Yeah.
Most of the military intelligence that was circulating in the United States prior to this.
Yeah, but at the moment,
it,
we're seeing like just images of like dust and debris, but no one's actually confirmed yet, right?
Well, because it's the depth, right? I mean, the analysis previously was that it would require 10 a flight of 10 B. So the B-2 bomber, as everybody has seen in the past and has recently seen, is arguably the most powerful military weapon in the world because it can launch from the center of the United States, fly a 37-hour round trip, and drop these bunker busters that go down 60 meters. The counter to that is that Iran has been aware of this for decades and that their infrastructure is built at such a depth that it would require 10 B-52 flights, or 10 B-2 flights, excuse me, in order to do that. And it's not clear whether the United States has done that. And the United States obviously ran some number of B-2s. It's not clear that they ran the stack of 10, and the 10 have to hit the same location 10 times in a row in order to actually create permanent destruction. And so we'll see. I mean, it's really going to come down to the engineering on the Iranian side over the last 30 years versus the ordnance and the capabilities of the bunker busters coming off of those B-2s. I don't think it's out of the question that the United States will run more, by the way.
And also, they have to hit them, by the way. Just looking at the chat there, because we have a lot of knowledgeable people here. They not only have to hit them in a row, but they have to be at a certain height. So those bombs drop at a certain momentum. A person saying Dylan should be featured on Tasty during our time, but everyone reminding a person that Dylan is now speaking from here because he is in Milan. Bigger Beers saying not to mention the US and allies have been leaving the Middle East. And also a person talking about satellite imagery. The gallery put up my screen before I could call it. But if you're looking for satellite imagery on things such as Iran and very good imagery, Maxar is the satellite service that is used by a lot of the top surveillance teams in this world, and also many of the geopolitical correspondents who write all this good stuff for the Bloombergs and the Reuters. So Maxar is what they use. Right, we have to head off now. Dylan, really, really good talking to you, and I'm sure you don't need it, but break a leg for tonight.
Thank you so much. Thank you so much. I can't wait to see you, hopefully sooner than later.
Fantastic. Send us pictures and we'll get them on Trade Live with IG.
And looking forward to seeing all of our trader friends a little later. Thanks for coming into town, and everybody travel safe. And I'll see you in a few days.
Great. Thank you very much, Dylan. And we are going to have Axel Rudolph coming up next with Trader of the Week. So slam your questions here and we'll get him to answer them.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could Go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hello and welcome to Trade of the Week on Monday, I think it's the 23rd of June, yes it is. And let's get straight into today's Trade of the Week, which is to go short the US dollar against the Japanese yen. And why would I do that when the US dollar exchange rate is heading higher? Well, basically, I'm still looking at the trend, and you can see here the trend since January of this year has been pointing down. We've had a series of lower highs and lower lows, and yes, short term we're heading up again, but we saw something similar happening at the beginning of May and also here in March, and then the trend resumed because from a fundamental point of view also, we still expect the Bank of Japan to keep on hiking its rates, whereas we expect the Fed to cut twice this year. Now, short term, the US dollar has risen today because of the escalation in the Middle East over the weekend, with the US bombarding several nuclear sites in Iran. And that has led to flight to quality flows into the US dollar, hence this spike higher that we're seeing at the moment. But I would like to use that to go short dollar yen. And basically, because of the current geopolitical situation and it potentially escalating in the next few days, I would like to use a pretty wide stop, not just above the May high, but also above these highs here going back to the beginning of March and end of March. So they're just sort of above 150.30. Why all the way up here? Because basically, as I said, short term, we might actually slightly go higher, go towards 148.50, 148. And we've got a lot of resistance here, previous lows coming in just above that area. And that's why I think we need a little bit of a wider stop this time. But we would only put this trade on if we have a good risk to reward setup. And therefore, my downside target is still the low seen back from April, and that was around 140. And before I summarize this trade, I'd like to also talk about last week's trade, and that was to go long the DAX 40, the German stock index. Here, it looked as if we had broken through a downtrend. We were heading higher on the day, but then unfortunately we got stopped out because we fell just below that low from the 23rd of May, closed below there for a day, and we're trading back above it now. But that trade would have gone wrong, and we would have lost 2% of our trading capital on that trade, because that's what we're risking per trade. So in summary, today's trade of the week is to go short dollar yen at around current levels, let's say 147.50, 148, and have a stop loss though at 150.30 and a downside target in the 140 region. I can't hear the gallery. Okay, I can hear you now. Let's go straight into technically speaking, and I've got loads of questions. So let's start off with the first one. Let's have a look at DoorDash. Who's got DoorDash? Monkey Man, here we go. Are you short or long? Don't tell me, I don't want to know. But right now what we're seeing here from the longer term chart is a bullish trend. And basically we've been trading sideways with a slightly bullish bias here over the last few days. If we go to the longer term charts, as you know, I always prefer to go to the longest term chart possible, and this is the monthly chart. We can see our all-time high going back to November of 2021, and right now we've broken above previous highs from February, and we are on track for our third consecutive monthly rise here. So that looks pretty healthy to me for the bulls. Short term, there's a potential signal for some consolidation. Why? Because as you can see here, today's intraday high was higher than the one from the 16th of June and higher than the one on the 5th of June. So we have a series of higher highs. But if you look at the oscillator, the relative strength index here at the bottom, you can see that basically we have a series of lower highs, which is negative divergence. So basically we're heading higher on the chart, but we are pointing down on the oscillator. So that's not confirming the current price strength. When we see negative divergence in about 70% of cases, it does tend to lead to at least a short-term correction in the trend. So it's possible that we could, over the next few days, just come down again. But basically for me, as long as we stay above the last reaction low, which is the important reaction low, which is this one here, going back to the 10th of June low on the daily financial bet, that was made at 21,098. Provided we stay above there, we still have a series of higher highs and higher lows, and that uptrend very much remains intact. Now I've got another question here on Palantir. Let's have a look at Palantir, very popular stock. And you can see this all session chart here. Again, let's go on to the monthly chart, and we can see Palantir making new all-time record highs. Very healthy, continuing in its uptrend on the weekly chart. Losing a little bit of upside momentum here, but still bullish. And on the daily chart, we are basically still looking good, because basically if you look at the trend line here, you can see that we remain in an uptrend. We continue to see a series of higher highs and higher lows. Yes, we're losing upside momentum, but it could just be one of these phases that we saw, for example, around the end of May. We just trade sideways for a while, and then we go higher again. So here the trend is still very healthy. The oscillators, yeah, they're not even overboard. So we could have further upside, take us to new all-time highs. For me, from a short-term trading perspective, it would probably be this low here, because you can see we have two sharp down days followed by four here up days. That last reaction high is the important one. So here on the daily financial bet, 11,725, that's probably your stop loss if you're long. From a medium-term perspective, you can place it wider. You can see here from a medium perspective, we have these highs here, and also the high going back to February of this year, which should act now as support together with this low. So we should definitely remain above there. But if we don't, and if we were to fall through the 6th of May low, the next lower important relative low, then that could mean that the medium-term uptrend is actually broken. So that would, from a longer-term perspective, be my stop level here. But yes, Palantir is still looking good. Now I've got another question here saying, away from the numbers, could you take a look at BMEPB? Let's just do that, BMEB. So British European value, and that's the beauty of technical analysis. We can look at any market that is liquid. It doesn't matter what the asset is. It doesn't matter whether it's an ETF, whether it's a fund, whether it's a stock, a share, a currency, a commodity, anything. So what we can see here is, if we go onto the very long-term chart, that we are actually retesting on the monthly chart the lows seen from February of this year. And you can see that low in February was made marginally above this March 2020 low. And that in turn was made not that far above this July 2016 and November 2016 low, and also the low seen in October 2014. So what's the trend telling us? Well, the trend is bearish, as we can see here. Even when we had this 1 month up move here, and we could see that perhaps we were trying to reverse, we then had this doji and then this sharp monthly down candle again. Now this one is June, so the month of June is not finished yet. So that pattern doesn't mean anything for the time being. But if we go onto the daily and the weekly charts, you can see on the weekly chart, we've had 2 consecutive weeks of falling prices. And then last week we just held here above the support. So technically speaking, this support here on the daily financial bed going down to 254.60, that's the line in the sand. If you want a wider stop, then it's definitely the 16th of March low 2020 at 246.16 in case you're long. But if we fall through there, it is very likely that this downtrend will take us lower towards these lows here. And that would mean we're going back down towards 228.63 to about 225.18. But the trend is your friend. It's pointing lower. As long as we don't take out the May high, which on the daily chart is quite a long way away at 348.95, we remain in a bearish trend. From a short-term perspective, as long as we stay below last week's low, ideally actually this low here, because that one's more important because we had this huge decline trying to bounce back here after this hammer formation, but then failed again. So as long as we stay below the 6th of June high at 294.50, the trend is still very much pointing lower. Right, let's look at rubric. Let's do that. I've got loads of questions here today, so I'm going to try and answer all of these if I can, if we have enough time. So let's do the analysts together, because also these sessions are here to help you learn. What can we see? We can see 4 months of rising prices, 2 months of lowering price, and then a nice bullish candle here last month in May, a very positive bullish candle. That's all very good. We may retest the halfway point of that body between the open here and the close. That might act as support together with these highs going back to February of this year. That is on the daily financial bed at 7,989.5. That's support here. On the weekly chart, we've had 2 consecutive weeks of falling prices, so we're losing upside momentum. And on the daily chart, what we can see here is a correction of this trend. But it's normal for trends to correct. So what can we do here is we can put a Fibonacci retracement on this chart and see how far the correction could take us. Normally it's about 38.2%, or sometimes it goes all the way to 61.8%. But when that is the case, most of the time it's not necessarily a correction, it can be a change of the trend. But we take the lowest point of our chart here, as you can see, that's the lowest point. We then connect the Fibonacci retracement to the highest point on our chart, which is this one there. And then we draw our retracement levels. You can see that's the 23.6. That's not so important, but as you can see here, the 38.2% Fibonacci retracement comes in here at 8,188.9. So that is potential short-term support, maybe, I don't know. Below that, we've got a 50% retracement down here. From a technical perspective, what we can also look at is the distance from that high to this low here. If we take that distance and project it lower from that high here to the downside, that takes us also into this area between, let's say, the 38.2 and the 50% retracement. So if that is an ABC Elliott wave correction, it should end in this area here, and we should then continue the trend. So yes, short term we are bearish. If you're short, your stop loss is probably the high from the 16th of June last Monday, which on this daily financial bed was around 9,422. If you're long, then it is possible that we may find support in this area, sort of down to 7,530 perhaps, before the trend then continues. But the trend was very healthy for a long time. So this is more likely just to be a correction in an uptrend than a new downtrend from a longer term perspective. And you can see here we've been overbought on the relative strength index for over a month. So it's normal to have a corrective phase, and that's all we're having at the moment, in my opinion. but I'm not giving you advice. You have to do your own analysis. But the chart to me looks as if we're just having a correction in a healthy uptrend. So another question, Tesla up or down? Well, tell me your time frame, because the problem is you could be looking at a totally different time frame than I am. Well, on the daily chart, what we can see here is that we tried in the overnight session so far, because this is an all sessions chart, to break out above the 11th of June high, but we failed so far. So as long as we still stay below there, we might just be trading sideways. If we were to manage to break above this high and close above the high seen on the 11th of June, then it's quite likely that the Tesla share price, in my opinion, could go higher again and may retest the highs seen back here around on the daily financial bed to 35,496, or even the highs seen here at the end of May at 36,756.5. So why am I saying that? Because you can see here from the low in April, we've had a series of higher highs and higher lows despite that sell-off. If you're long, that important sell-off here is where our relative low is, and that is basically where these previous lows were made. So I wouldn't look at this one because that's marginally below there. I would probably, if I'm long, put my stop loss from a medium-term perspective below these lows down here. So that's them around 27,104. So short term, as long as we stay above the 13th of June low at 30,945.5 on the daily financial bed, I think this chart still looks bullish. Medium term, we're still bullish whilst we stay below these lows here, going back to the 30th of April. And in the very short term, as long as we stay below the highs seen on the 11th of June, we might slip a little bit further intraday. But yes, we'll have to see. Another question has to do with AMD. Keep these questions coming. I love this. What can we see here? We can see that basically we broke through a downtrend line, which I need to redraw, but that was the downtrend line. We broke through it. We then went higher. And we can see that we are trying to form a bottom here. And we have, technically speaking, formed a bottom. How? How do we know that? Can you see these highs here going back to February and also to March? Those were the important highs. That was resistance with these lows. And then what we had is a close not above these highs there, or yeah, it was actually on the 11th, 14th of May. For the first time, we had a close above these highs. So that was telling us that it was very likely that we are now coming out of this downward session. Then we went sideways. And then we broke above this high here again, closed above it. And then we had a confirmation with a nice big bullish candle here on Monday of last week. So for me, that trend is very healthy now from the April lows and is likely to continue. Where's my stop loss if I'm long? The last reaction low, that's the low here from the 13th of June on the daily financial bed at 11,506. So you can see we always apply the same sort of methodology. Now, you might not agree with mine. You can come up with your own. But I always have a very systematic approach of how I look at the market that I'm looking at. It doesn't matter what the underlying asset is. So I've got a very disciplined approach and a structured approach, which I can replicate on all kinds of time frames, all kinds of different asset classes, and therefore, which I know, for me at least, works because I know at which points I'm most likely to be wrong than right. So here, the last reaction low is this one here. As long as we're above there, it's still bullish. Another question, Pelican. Forgive me for not Peloton. Oh no. Archer, sorry. So Pelican is the name of the person who sent me the question. Arthur, I was wondering, what is this stock? I haven't heard of it before. Sorry, Pelican. Yes, so Archer Aviation. Well, this one is interesting because that's the sort of thing I would put into an exam because you may know that I'm part of the Society of Technical Analysts and I am outside of IG also responsible for the education for the UK body of technical analysis, the Society of Technical Analysts. And by the way, you can learn a lot there about technical analysis. All the stuff I'm showing you here, we also teach at universities and in courses. So have a look at that if you want to learn more about technical analysis. But Archer Aviation, why is it interesting technically? Because we've had this huge up move in November 2024 on the monthly chart. And then can you see these candles where you have sort of moves to the upside, downside, and then we close more or less where we opened at the beginning of the month, at the end of that month. And then the same happens in the following month in January and again in February. Then we had a big down month in March, but then a bullish month in April. And then we had this huge spike higher to, on the daily financial bet, an all-time high, but we closed basically where the previous closes were back in December and January of that year. And at the moment, we're trading back in that area. So it's unclear what's going on here. What we can see here is higher highs having been made on the weekly chart. But if we look at our oscillator, and you can see this, we've applied it on the daily chart. Now we're applying it on the monthly chart, a weekly chart. Can you see here that that high is lower than the high we saw back here in December? So we have a lower high, not confirming this high. And then lo and behold, we had this potentially bearish Harami formation, and then we sort of drifted low over the last few weeks. So on the daily chart, what we're seeing now is a loss of momentum. We can see this small candle. So here the investors are just waiting to see what happens next. Where's our last relative low? Well, it's the low going back to the 5th of June. That on the daily financial bet was made at 910.5. So basically, as long as you stay there, that might still be a sideways trend and we may go back up again. But can you see here from the 7th of April lows, we had an uptrend. Then we have potentially what it can be an A, B, C zigzag. So it's this zigzag formation, this three-wave counter trend formation I just talked about on the other chart. And that could have meant that this corrective move has now ended and we're just in the first phase of another up move. So that was the up move. Now we go down, we have another up move and we continue the trend. So basically, for that reason as well, the 5th of June low is the one to watch if you're long. If you're short, well, obviously the all-time high here at 1,441 is your stop loss. If you want a tighter one, it's the last reaction high, which is the 11th of June high, 1,251.5. So right now, we're between a rock and a hard place. You can see little volatility, and we're just trading sideways. Right, oil. Well, oil is an interesting one, isn't it? I mean, you might have read the articles I wrote last week with regards to the crude oil price, where I came up with all the different scenarios. What happens if the Strait of Hormuz gets closed? I'm not as bullish as Goldman Sachs, for example, who said that if that were to happen for a month, the oil price would be on WTI going up to $110 per barrel. My targets were sort of $95, but still have a read at that article from last week on the IG website, or look for my name and oil, and you can see I did analysis technically and fundamentally on that last week. Right now what we're seeing on the daily chart is that in the Sunday session we moved up because the oil price shot up to 5% when the US bombarded the nuclear facilities in Iran. And now we've got the Iranian parliament also voting for the Strait of Hormuz to be closed. And we know that about 20% of the global world oil goes through that, and also 25 to 30% of LNG gas. So that would be quite bad for all of us, but also very bad for Iran, which is why the market seems to think, since the Supreme Council hasn't approved this closing of the Hormuz Strait yet, that maybe that risk is not as high as people thought over the weekend. So you can see here we had this Sunday candle, but on the open market, on the real market, here we're looking at the daily financial bet, that didn't happen. So right now, we're basically trading back below the high we saw on the 12th of June when Israel started to send missiles towards Iran. So what can we see on our chart? Well, we can look at our highs and lows, and we can also look at what our oscillators are telling us. So if we look at the RSI, excuse me, you can see here I use the 9-period RSI because I want earlier signals than the other people who use it the 14-period. And you can see here what we're potentially seeing here is a higher high, but it hasn't been confirmed by the oscillator when we're making lower highs. So that's potentially negative divergence, which could mean that we could actually come off with regards to the oil price over the next few days. Now, obviously, if the Strait of Hormuz were to be closed, or if the Supreme Council were to say that they wanted to do that, then we will probably very quickly rally above this high and go higher. Where are the next upside targets? Well, we can see here, we've got these highs here going back to August of last year, October of last year, then the high seen here at in January of this year. That was around $79.60. So on the daily financial bed, 7,959.8. And then the next upside target would be very quickly the July half 2024, and that's around $84. So that is a distinct possibility if we were to rise above that high that we made on Sunday. But for me, technically, the high from the 12th of June is more important. So if we rise above that one today or in the next few days, then I believe the uptrend will continue very rapidly. In that case, your stop loss would be probably the low from the 16th of June from last Monday. That was around $68. And basically, if we don't have an escalation, we could just drift slowly back down again towards the previous support area. You can see here the high going back to April of this year, around $72, or perhaps back towards the $70 area. So that is a possible scenario. Right now, short term, we seem to be drifting slightly lower again. Right, I've got one last question I can answer here very quickly before we run out of time. Wise PLC, let's look at this one. You can see here on the monthly chart, we retested and intraday made on the daily financial bet a new all-time record high earlier this month, but on the daily chart we then came off. So if you see sort of 3 days of negative candles taking out one positive body of this candle here, that is never a good sign for the bulls, because then what we saw is a fall through these previous relative lows, and now we've fallen down here. So right now we're just trading sideways here, but the downside pressure seems to be more prevalent than the upside pressure. So if you are long from these April lows, then your stop loss is probably just below these lows, below the low we saw on Friday and the previous week, in which case we could just continue to trade sideways. But if we fall through these lows, it's very likely that we may actually go further down towards the 950 area in the next few days or so. If we were to go above the high seen here on the 18th of June at 1084.5 on the daily financial bet, then that probably means we're broken out of the sideways trading range in the short term, and we may go back up again towards these highs here seen at the end of May, 1133 or so. Thank you very much for watching Technically Speaking with me, and I hope to see you on Charting Crypto, where we'll talk about technical analysis as well on Wednesday, 8:30.